Here's the last easy money you're probably going to see for a very long time. And I mean that. Not easy, like a lottery ticket. Easy, like a bet where the odds are so stacked in your favor that it almost feels unfair. Everybody right now is piling into the same 5 or 6 AI stocks, buying the thing that already went up 1,000% and quietly hoping they're not the last idiot holding it when the music stops. I get it. I've been that guy before more than once, chasing something because it was going up and I didn't want to feel left out. But the real opportunity right now isn't the chatbot company. It's not the chip company either. It's electricity, boring, dumb, unsexy electricity. The stuff that powers your fridge and your TV, and funny enough, every single server running all that AI, everybody's losing their minds over. We are about to build more electricity generation and grid infrastructure in this country over the next 15 years than we built in the previous 50 combined. And I promise you, 95% of the people scrolling past this video right now have no idea it's happening. This isn't a penny stock tip. It's not some coin somebody's cousin found on a forum. It's a slow, unglamorous, almost impossible to kill part of the economy that case about to have $1 trillion poured into it. Whether the AI hype train keeps rolling or crashes into a wall next year, give me half an hour, I'll walk you through exactly why this thing is about as close to a sure bet as I've seen in a long time, why it's still stupidly cheap, and why the window on it is not going to stay open much longer. Before I go further, do me a favor, subscribe now, not at the end, now. Because what I'm about to break down is the kind of stuff people pay an advisor a couple $100 an hour for, and I'm handing it to you for nothing. All I want in return is one click. Costs you $0, tells me you actually want more of this instead of the recycled garbage everywhere else. Hit it, then keep going, because it gets better from here. Okay, let's actually get into what this is, because I don't want you just nodding along. I want you to actually get it in your bones. Think about what's happening right now. Every big company on the planet is racing to build more AI computing power. That means data centers, massive buildings, some of them the size of 20 football fields, are packed floor to ceiling with servers running 24 hours a day, 7 days a week. And here's the part nobody puts in the headline. Those buildings don't run on hype. They run on electricity and a genuinely insane amount of it. One of these big data center campuses can pull as much power as a mid-sized city, not a neighborhood, a city. And we're not building one of these, we're building hundreds all at once, all over the country, right now, while you're watching this. So while everybody online is arguing about which AI is smarter or which chip is winning, the real bottleneck, the thing actually slowing this whole boom down, is whether the power grid can keep up. Right now it can't. I've talked to people who work at utilities, and they'll tell you straight, they are getting requests for new capacity they've never seen before in their careers. And some of these are guys who've been doing this for 30 years. This is already happening in Texas, in Virginia, in Georgia, in a dozen states where utilities are begging regulators to let them build faster than they have since, honestly, since before most of us were born. So the bet here isn't picking which AI company wins the race. That's a coin flip. And I've lost enough coin flips in my life to know better than to bet my whole future on one. The bet is that no matter who wins, they all need the same thing to even function. And that's power. You don't have to be right about who wins. You just have to own the road. Every single one of them is forced to drive on to get anywhere. Now here's why this actually works for a regular person, not just some hedge fund with 40 analysts on payroll. The companies in this space, the utilities, the equipment makers, the transformer manufacturers, the nuclear and natural gas operators, these are not exciting businesses. Nobody's throwing a launch party because a company built a new substation in Ohio. These are the kind of companies that have quietly made money, paid a dividend, kept the lights on literally and figuratively for decades without anybody noticing or caring. And that's exactly why regular investors ignore them. We're wired to chase the thing that doubled last month, not the thing that's been grinding out a steady return since before we had a savings account. I used to be guilty of this too. I wanted the exciting swing. And the story I could tell at dinner took me some expensive lessons to learn. That boring and profitable aren't opposites. A lot of the time, they're the same thing, wearing a different outfit. Nobody's making a viral video about a company that their manufactures transformers. But I'd rather own the business every data center on Earth is legally required to buy from than guess which app teenagers are going to like next year. So why is nobody paying attention to this? Because it's boring, and boring doesn't trend. So when most people think about investing, their brain jumps straight to the flashy thing, the self-driving car company, the chip stock, whatever their brother-in-law won't shut up about at Thanksgiving. That's human nature. We like good stories. Nobody brags at a barbecue about their utility stock. But here's something that took me way too many years and way too many bad trades to actually internalize. Excitement and profit are not the same thing. And honestly, they're usually pointed in opposite directions. When everybody's excited about something, the price already has that excitement baked in. You're paying full price, sometimes more, for a story that literally everyone already knows. When something's boring and overlooked, that's usually a sign the price hasn't caught up with reality yet. And right now, the reality of how much power this AI build-out actually needs has not caught up with how cheap a lot of these power and infrastructure names still are, and Wall Street keeps raising its forecast for electricity demand growth, and every time they raise it, they're basically admitting they got it wrong. The last time, that gap between what's actually happening on the ground and what's priced into the stock, that gap is where money gets made. Not complicated, not a secret formula I'm selling you in a course, just paying attention to the boring stuff while everyone else stares at the shiny stuff. There's another reason this stays quiet, and it's that infrastructure takes real time. You can't build a power plant on a weekend. So laying transmission lines, upgrading substations, that's years, sometimes closer to a decade. We live in a world now where people want to win. By Tuesday, they buy something on Monday, and they're already checking if they can brag about it. By Friday, I've watched grown adults with real money get genuinely angry that a boring dividend stock didn't move in 2 weeks. This kind of opportunity punishes that mindset completely. And honestly, that's good news for you because it filters out 90% of the competition automatically. You're not fighting millions of day traders refreshing their phones every 4 minutes for this one. You're up against a much smaller group of people willing to actually sit still. Let's get into the actual math because I don't want you taking my word for it. I want you seeing the scale for yourself. Independent estimates from utilities and grid operators and energy researchers put the additional investment needed in power generation and grid infrastructure in this country somewhere in the hundreds of billions of dollars just through the end of this decade. And that number keeps climbing every time somebody updates the model. Data center electricity demand alone is expected to roughly double. Some estimates say more than double within the next several years. Sit with that for a second. Every extra unit of demand needs generation to produce it, wires to move it, transformers to step it up and down, equipment to keep the whole thing stable. Every link in that chain is a business. And a lot of them are companies you can buy a piece of with your phone in about 90 seconds. Natural gas is filling a lot of the near-term gap because it's the fastest thing to actually build. Nuclear is having a real comeback because it's the only source that just runs day and night, rain or shine. And you're seeing tech companies literally sign deals to restart old nuclear plants just to lock in guaranteed power for themselves. Renewables keep growing too because the appetite is so massive that everything gets used. Nothing gets left on the table. This isn't a pick one and hope story. It's an all of the above story because the hunger for electricity is bigger than any single source can cover by itself. When you get that kind of broad, multi-decade demand increase stacked on top of infrastructure that already takes years to permit and build, you're staring at a supply and demand mismatch that does not fix itself overnight. That mismatch is where the money is because scarcity plus something people absolutely cannot live without is about as close to a guaranteed setup as this business ever gives you, let me put it in terms that actually mean something, instead of just throwing big, scary numbers at you. And for most of the last 20 years, electricity demand in this country barely moved maybe 1% a year, sometimes flat, because we got more efficient with appliances and lighting. At roughly the same pace, the economy grew. Utilities planned their entire business around that slow, boring, predictable number. Now the forecasts have flipped almost overnight, and some grid operators are projecting growth rates several times higher than what they were planning for even 2 years ago. That's not a small tweak. That's an entire industry ripping up its playbook and starting over, and industries don't pivot that fast. Not even close. The big transformers, the ones that step power up and down, some of those have order backlogs stretching years because there simply aren't enough factories on Earth making them fast enough. When the thing everybody needs is sold out for years, whoever makes it has real pricing power. And pricing power is exactly what turns a boring business into a genuinely great one. And think about who's actually writing the checks here. This isn't some venture fund betting on a startup that might not exist in 3 years. This is the biggest, most cash-rich company that has ever walked the earth, committing tens of billions of dollars a year specifically to lock down power for their data centers. When companies with that kind of balance sheet start signing 10 and 20-year power agreements, that tells you everything. They're not hoping, they're not maybe interested. This is existential for them. No power, no data center. No data center, they fall behind in what might be the biggest technology shift any of us see in our lifetime. That kind of pressure doesn't ease up because the stock market had a rough Tuesday. It's baked into how these companies plan to survive the next decade, full stop. Now let's talk about why this window is not staying open. And I want to be straight with you here because I hate when people online manufacture fake urgency just to get you to click buy. This urgency is real. As these forecasts keep getting revised up, as this stops being niche knowledge and starts becoming common knowledge, the prices on these companies start catching up to that reality. And the easy money gets a lot less easy. Right now, and today, a lot of these names are still priced like sleepy utilities instead of what they're actually becoming, which is their critical infrastructure for the most important technology shift in a generation. That mispricing doesn't last. Once Wall Street fully wakes up, and it's already starting to, valuations move fast. And the guy buying in after it's on every finance show is not getting anywhere near the deal you get by paying attention today. On top of that, permitting reform is genuinely picking up speed in a bunch of states, letting new plants and transmission lines get approved faster, which sounds small, but it's a big deal because the companies best positioned to actually execute are going to pull way ahead of everyone else, stuck waiting in line. There's a bigger reason for urgency too, and it's the one I opened with. A lot of the flashiest AI names right now are priced like nothing can ever go wrong. Forever. History does not work that way. Not once. Not ever. Every major technology boom I've lived through, and I've lived through a few of these now, goes through a stretch where the hype outruns the actual profits. And there's a genuinely painful correction before the real winners shake out. I'm not telling you AI is fake. I think it's real and it's going to change a lot. But I've been burned enough times to know that when everybody's crowded into the same handful of names, telling the same story, that's usually not where you want all your money sitting. The power and infrastructure companies underneath the boom are a completely different animal, even if the flashy stuff corrects hard. And I think some of it will. People still need electricity, homes still need power, hospitals still need power, factories still need power. That demand doesn't vanish because sentiment on some chatbot companies turns sour. That's what makes this the unkillable side of a very exciting and honestly a little bit scary story. And look, I know patience isn't a fun word to hear. Nobody wants wait a few years when they're watching someone brag online about doubling their money on a coin over a weekend. Ask that same person how they're doing a year later, though. Most of the time you'll get silence because those quick wins almost never turn into lasting wealth. The people who actually build real money over a lifetime, the ones who quietly end up comfortable, then wealthy, then set for their kids too. They almost never got there chasing the loudest story in the room. And I've made both kinds of bets in my life, the loud ones and the boring ones. And I can tell you which ones I still own. Let me tell you about a mistake I made because I think it explains this whole thing better than any spreadsheet could. Years back, there was a boring industrial company made of parts nobody's ever heard of. The kind of stock that shows up in your portfolio and you forget you own it. I sold it because I wanted the money for something more exciting, something I could actually talk about. That something exciting went to basically zero within a couple years. The boring company I sold, it's worth multiples of what I sold it for today, and it never once made headlines the whole time. I tell that story to myself because I want you to actually feel it, not just hear it as a lesson from some guy on a screen. The pull toward excitement is real. It's not a character flaw, it's just how our brains are built. But acting on that pull without checking yourself is how a lot of people quietly bleed money for years without ever understanding why their portfolio never seems to go anywhere. The businesses that made me the most money over the long run were almost never the ones I was proud to bring up at a party. They were the ones that just kept doing their job year after year while I forgot about them. So let's get practical, because I don't want you walking away from this feeling inspired with nowhere to actually put that energy. You don't need to pick one perfect company here. This sector is wide. It includes regulated utilities that pay you a dividend while you wait around, independent power producers building new plants, companies that make the transformers and cables and switchgear that physically make the grid work, and the natural gas and nuclear operators supplying the fuel underneath all of it. You can spread your bet across several of these pieces instead of putting your whole future on one name, being right. And for a lot of people, a simple, low-cost fund focused on utilities or infrastructure does most of the heavy lifting without needing to turn yourself into a stock-picking expert overnight. Do your own homework before you put a single dollar anywhere. Look at how much debt a company's carrying, because building power plants and transmission lines costs real money, and some companies finance that growth a lot more responsibly than others. Look for actual signed contracts with data center operators or utilities, not just a hopeful press release with a nice photo. Contracts mean revenue, press releases mean marketing, and think in years, not weeks. I keep saying it because it matters. This is closer to planting a tree than flipping a coin. You're not opening your app tomorrow to see it up 30%. And if that's what you're after, this isn't your trade. I want to be honest about something else too. I don't have a perfect track record here. Nobody does. And if someone's telling you they do, walk away from them fast. I bought infrastructure names too early before rates moved against them and sat there watching red for over a year, feeling like an idiot the whole time, questioning whether I actually understood what I thought I understood. That's part of the deal with this kind of investing. It doesn't feel thrilling while it's working. Half the time it just feels like nothing's happening at all. And then one day you check and realize it's quietly become one of the better decisions you made that decade. If you need constant excitement to feel like your money's working, I'll tell you now, this isn't going to scratch that itch. And that's fine. Just know yourself before you put money anywhere. Now the traps, because I'd be doing you a disservice if I only gave you the good news. Not every company slapping the words AI or data center on a slide deck deserves your money. Some smaller, speculative names are going to ride this wave with nothing behind them but a hopeful timeline. And those are exactly the ones that can wipe you out if you're not paying attention. Interest rates matter a lot here too. Building infrastructure means borrowing money. And if rates stay high, that raises the cost of doing business for everyone in this space. So keep an eye on that backdrop. Don't ignore it because it's boring too. Regulation can slow things down. Utilities answer to state regulators who decide what they're allowed to charge and build. And that process moves slower than Wall Street would like, which is exactly why patience matters as much as it does. And never, under any circumstances, put money into this or anything else you can't afford to lose or that you'll need again in the next year or two. This isn't a get-rich-quick play. Anyone telling you it is lying to your face to get a click. I'm not your financial advisor. I don't know your specific situation, so do your own digging. And if you need to, sit down with someone qualified who actually knows your whole picture before you move a dollar. Here's my challenge before you close this out. Don't just sit there nodding along and forget every word of this. By tomorrow morning, I've seen too many people do exactly that. Go pull up one of these power infrastructure companies or a utility-focused fund and spend 15 honest minutes looking at it. The way I just walked you through the debt, the contracts, the growth numbers, all of it. Then come back and tell me in the comments what you found, because I actually read them and I want to know who did the work instead of just watching and scrolling on to the next video. Opportunities like this, boring, unglamorous, sitting quietly underneath one of the biggest shifts of our lifetime, don't come around often, and they don't stay quiet forever either. Right now, you've got a window while most people are still staring at the shiny stuff. Use it. Subscribe if you haven't yet, because I'm going to keep digging up exactly this kind of thing every single week. This stuff nobody else bothers to explain until it's already too late to matter. I'll see you in the next one.